Welcome to Module 3, Section 10, where I discuss an important topic known as the Securities and Exchange Commission. The Securities and Exchange Commission, also known as the SEC, is an independent agency of the U.S. federal government that regulates U.S. exchanges by enforcing securities laws passed by Congress. Tenets of pure capitalism don't really like a regulated market. However, because there is so much opportunity for people to mislead you or for there to be false investments, and because of all the Ponzi schemes that have occurred over the years, it has become necessary for one regulatory body to oversee the entire stock market in the U.S. The idea is to make it fair for not only the big players, but for the individual investors as well. Securities laws help promote markets that are fair, no matter if you're big or small, if you have a lot of money or a little bit of money in the market. Orderly, the idea that you can buy and that you can sell, and that there are standardizations within the market that you can rely on, and that they're efficient. You place an order and it doesn't get lost. It'll eventually be executed. And just the overall mechanism acts in a real efficient manner. The nice thing about this too is that during the day, we get information that's updated instantaneously, and that's part of being an efficient market. Things are recalculated. A lot of technology is used to give us information, and that is very helpful. The SEC is expected to protect investors from abuses such as fraud, misleading or false information, and even insider trading, which there have been some big cases over the years. Think of Martha Stewart. She got in trouble not for insider trading. She got in trouble for lying when they came to her and asked her, "Did you do insider trading?" She said no. That's what got her into trouble. So the idea is to follow the rules. And for some reason, if you don't follow the rules and they come and ask you about it, just fess up right off the bat, because the penalty is a lot more severe. If you watch the very first Wall Street movie, that's why Bud ends up going to prison at the end of the movie, because he shared private information that was not available to the public, and Gecko was able to take advantage of that and make a lot of money. The SEC is also expected to promote a well-functioning economy. You could talk about that for a long time, and there are thick books written about this topic. Sometimes they seem to do a pretty good job. Other times we're wondering what in the world are they thinking, but it is what it is, and we have to kind of roll with it. They also monitor corporate takeovers. So when one company goes to buy another company, they have to tell their intentions to the SEC, and the SEC has to check this out and make sure, okay, that's a fair deal. Or no, this violates antitrust laws, and you can't do that. Who are the commissioners on the SEC? They're appointed by the U.S. president and approved by the Senate. So there is a bit of checks and balances going on as to who is on the SEC. There are 5 commissioners, and no more than 3 commissioners can belong to the same political party. So you can't have 5 Republicans or 5 Democrats all at the same time. You can't even have 4 and 1. It has to be 3 and 2. Their terms last for 5 years, and they're staggered, so each year an old commissioner is replaced by a new commissioner. So we're always getting some new blood into the SEC every year. Why was the SEC even created? Back in 1934, it was created under FDR, Franklin Roosevelt, during the Great Depression, and was largely in response to the 1929 stock market crash. It's a very famous crash that most people look to as the start of the Great Depression. Well, to try to do something about that, FDR enacted the SEC. Some people see this as too much control and this should have never happened, while others think, yeah, this has really made the playing field a lot more level for everybody. You can make a case for either side. Their web address is sec.gov, and they have some pretty good information there. There's a lot of different sites that I go to find different sources of information. The SEC is different from the Federal Reserve Board, which is the Fed, and I talk about that in a different video. They're also in charge of legislation, in addition to the Securities and Exchange Act of 1934, which created the SEC. The SEC also enforces the Securities Act of 1933, so it's retroactive in that regard, which really doesn't apply to us now, but it was kind of a big deal back then. Also, there was the Trust Indenture Act of 1939, and you notice a lot of these first acts come about during the Great Depression. Some people see this as a real expansion of government power, while other people said we needed this in place to help things be more fair to everybody and to get us out of this terrible situation. There's also the Investment Company Act of 1940, and I'm not going to go in and describe all these different acts. They're kind of interesting, but the idea behind this video is just to show you how does the SEC impact individual investors on a day in and day out basis. Also, the Investment Advisors Act of 1940, the Sarbanes-Oxley Act of 2002. There's also the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. So there's continued legislation as time goes by. And the Jobs Act of 2012. So all of these together have really expanded and helped to define the role of the SEC. The idea behind this is the SEC exists, they have rules in place. Sometimes that can have an impact on the markets. We just need to know how are the markets going to be impacted. Here's the symbol of the SEC. They have a nice eagle, which is very similar to the seal for the United States, with the arrows in one hand and the olive branch in the other hand. And they have a very non-attractive building located in Washington, D.C. One thing that's kind of interesting about the SEC is their inaugural chairman, the first person who headed up the SEC. And being a history teacher and a history buff, I kind of like these things. The very first chairman was Joseph P. Kennedy. And here's a picture of him. If you're not familiar with Joseph Kennedy, you might be familiar with his sons. John F. Kennedy was his second oldest son. And then Theodore Kennedy and Bobby Kennedy. Well, one successfully ran for president, but wasn't there for very long, about 1,000 days. And it was really rumored during the 1930s that Joseph Kennedy himself was getting primed to be president. He was the ambassador to Britain during that time, and then he said some things that were kind of pro-Nazi, and FDR ended up bringing him back to the U.S., and that pretty much ruined his chances of becoming president. Then he tailored his oldest son, Joseph Kennedy Jr., to become president, but he was killed during a very dangerous mission over the English Channel when his airplane exploded. But after Joseph Kennedy Jr. died, then John F. Kennedy was the next in line, and he would be eventually the president of the United States. After he was assassinated, Bobby, his brother, made a run, and he was also assassinated in 1968. Back in 1980, Theodore Kennedy, or Teddy Kennedy as most people know him, he tried to get the Democratic nomination from Jimmy Carter, who was not a very popular president at that time, but he was unsuccessful in doing that. If you study much about Joseph P. Kennedy Sr., you hear a lot of interesting things about him. And a lot of people feel that the Kennedy wealth, which the Kennedys are as close to American royalty as you're probably going to get, but a lot of that wealth was not gained in some very moral ways. And who knows, maybe the thinking of FDR at that time was, if you want to stop crooks, you put a crook in charge, because they understand what's going on and they can play the crooks at their own game. So who is the current SEC chairman? This is Gary Gensler as of 2021. You may not know much about him. He's only been in office for a few months as I record this video, and it's yet to be seen just what kind of an impact he will have on the SEC. But you'll see him pop up in the news from time to time. He may do interviews. There may be statements that he makes that the market will take and make news out of those. Now, another thing that the SEC has to deal with sometimes are called blue sky laws. Think of these as pie-in-the-sky laws. That's kind of the term that we would use right now. A blue sky law is a state law, okay? So we have 50 states, so there could be 50 different laws, and they regulate the offering and sale of securities to protect the public from fraud. This is one of the reasons why the SEC was created, was to oversee the entire country. Other people that stick more to the staunch constitutional interpretation that most power should reside with the states, they don't like the idea of the SEC. They think that every state should regulate its own securities. Well, if you're in Oregon State and you want to buy companies based out of New York, you have two sets of laws that you have to deal with here, instead of having one set of laws that apply to all companies within the United States or all securities within the United States. But the idea is to protect people from fraud. They were enacted and enforced at the state level. So you might do something wrong in California and then you go to Florida and they don't know about you and you do that again. There was a real problem with some of these laws. The fact that you have different sets of laws in each state can make things a lot more complicated when you're doing things on a country level. Though specific provisions of these laws varied among states, they all required the registration of all securities offerings, so what you were selling, and sales, as well as if you were a stockbroker. If you lived in Arizona and you wanted to do business with somebody in Connecticut, you had to register in Connecticut as a broker. Just like in all of the states, there are different driving laws. Now, if you drive to a different state, you don't have to register there. But once you cross into that state boundary, you're under the jurisdiction of the laws of that state. These blue sky laws were generally found to be ineffective. You think? When you have all these different laws and all these different hoops that you have to jump through just to buy and sell securities or be a person who buys or sells securities to other people, that can make it really complicated. We're kind of going through that in a way with insurance in the U.S. right now, where every state has its own health insurance commissioner. A lot of people say we should forget about that. Allow states to sell across state lines. That will help produce lower premiums and that will make better health care available. We don't need something like Obamacare to take care of us. Why don't you just open up the capitalist system and let it take care of things? Now, other people say, no, we need the government to control health care. We need the Affordable Care Act to be available to everybody because people don't know the right things to do and there's a lot of corruption and we want people to have the same access to good quality health care. And the debate goes back and forth. Not as much now because Obamacare's been around 10 plus years. Over the last few years, and especially before Obamacare was passed, that debate was very heavy. Blue sky laws still exist, but have mostly been replaced by federal laws. Again, if you're a strict constitutionalist, you won't like that because it says in the Constitution, state laws will overrule federal laws. Well, this goes and just replaces that, where federal laws overrule state laws. And some people don't like that, while other people say, yeah, that's the right thing to do. The term is said to have originated in the early 1900s when a Supreme Court justice declared his desire to protect investors from speculative ventures that had as much value as a patch of blue sky. Again, we might use the term pie in the sky today. It's too good to be true. It's just a dream. It's not real. This concludes Module 3, Section 10, and I will pick up with things again in Section 11.